actually declining. Let's get to the brass tacks. Let's talk about fundamentals. Let's talk about demand, and let's talk about business itself. Bikaji Foods, that stock's been buzzing over the last 1 month or so, and that's largely ahead of the upcoming festive season. A lot of things happening in the industry itself. So let's talk about the demand picture and the outlook for the business going ahead. We have Manoj Verma, who's the Chief Operating Officer at Bikaji Foods, joining in. Manoj, the last 1 month, there has been a lot which has happened. From the last time we spoke to now, one of the biggest players in the market, Pratap Snacks, had a large chunk of their investors go out. We had Madhusudan Kela and another fund go ahead and invest in that company as well. So, two-part question. One, what does demand look like for people like you ahead of the festive season? And secondly, how does this deal in Pratap Snacks change the dynamics of the industry?
Yeah, good morning. First, I'll take your the second question, which is on the demand. I think demand is really good. There's a lot of excitement around in the market amongst our business partner, which is the channel partners, the moderate accounts, and the general trade. So that looks very good. We are now just 3 weeks away from the D-Day, which is Diwali, and everyone is on top of it. I mean, there's a lot of loading. As I visit the market, I go to the stores and see. So not only Bikaji, I see a lot of competitive stuff also in the marketplace.
That's about demand. And what about the industry dynamics? How does that change?
Sorry, on that Pratap Snacks, it actually doesn't matter to us. I mean, they were our competitors. I mean, they are there in the industry and will continue to be. It's only about the management which would perhaps change. To be very honest, it doesn't impact us at all. One, that the categories they are playing in, which is primarily Western snacks, has never been our very large share of business. It's a very small SOB for us. And secondly, the business was there before as well and would continue to be there. It's just the management change.
Okay, all right. Hi, Mr. Verma. Good morning and good to see you, Ben. What kind of growth are you working with for the year? I think earlier you were indicating low double digit is what you're working with. So should that be the volume estimate, 12, 13, 14% odd? And what about pricing growth? What are you working with for this year, FY25?
See, we are in a silent period. I may not be able to speak about growth specifically, but yes, when we talk about growth, we would continue to deliver, what we have said. We are bang on what we have planned. The festive season is more on the gifting and on the sweets part. So that has done extremely well, and they definitely would be the growth drivers.
All right. So, then how much is gifting as a proportion of your sales and how much is sweets as a proportion of your sales? What do they do to your margins? Because the festive season is all about sweets and the gifting.
So at an annual level, if I talk about the sweets contribute to about 12.5%. However, during these festive days, they go up as high as about 25% also. So therefore, it's a huge chunk, or huge share of business during these months.
And gifting?
So we look at gifting and sweets together, but yes, gifting is a smaller one. In that case, so gifting, if we put together, between these 2 months is about 5% they contribute.
Okay, all right. Mr. Verma, you have plans with regard to improving your EBITDA margins as well. But edible oil companies have begun to see mild price increases. How has it impacted your business, and what kind of EBITDA margin improvement are you looking at from here on?
Talking about oil price increase, that has impacted across players, and so us. Beyond the point, company would not erode margins, and therefore we'll have to pass it to the consumer. What we see that these price increases should impact, say, around 2 to 3% price increase.
So what does that mean for your margins? Because 2 to 3% is the price increase that you're looking at. The first quarter you did margins of close to 16%. That was a near 140 basis points improvement over the same time last quarter. With prices having increased, how much has your raw material basket increased by over the last couple of months? And how long before you increase the prices? I mean, what is the margin band that one should roughly look at?
So margin band, so if we look at without PLI, it was about 13.5. And we would stay around the same because the price increase, as I said, will be passed to the consumer. We have already started taking some price increase, and it is started going, below. We had certain, buying or certain product, these stocks with us, which we had, booked earlier. So therefore, the impact does not happen with no immediate effect. It takes some time, and we are, we hold stocks till then, and thereafter the prices, we have increased already.
Okay, export market, that's a very small proportion of your mix, but it gives you good, potential to go ahead and even feed the world. So what is it currently? Where do you see this number headed? And also give us a brief idea about reach, because you all were talking about expanding your reach. So numbers on both these two.
Yeah, so as of last quarter end, now we were directly covering 2.7 lakh outlets. And the target for this year, by end of the year, is we should be covering 3 lakh outlets. We are well on track. That's in terms of our direct reach. However, the indirect reach, what we spoke about, was 1.1 million outlet, and that we assume that about 50,000 outlets should go in our indirect reach as well. Here the game is two-pronged. One is reach, so the inorganic growth, the stores which were not selling Bikaji will sell, and the other is also throughput increase. So the stores where we were, how's that we increase throughput per store? So that's the growth drivers, the two levers now we are working on.
All right. And, on the channels itself, a lot of these FMCG companies have been saying that they've seen big traction in e-commerce, most notably quick commerce. So how much does that account for your overall sales, and how are you ramping that up for you?
Yeah, Q-com has done very well, over last 1 year, and it's growing even faster. Though it's a very small business. Now, to our business, it's about 2.5%. That's the share of business to us. But during these festive times, these will also be going up, to say about 50 basis point will increase further. And
what rate is it growing at, Q-com, for you?
So if I talk about over last year, now we've grown at about 250%. So it's an obnoxious growth because of very small base. And these growths are coming, again from two sides. One is that this Q-com span of area or span of service, these people have increased and increasing month on month. And other is that, the penetration, the more category loading and the throughput from this Q-com, that's also increasing. So these are the factors which is really, spiking the growth in this Q-com channel.
Well, the reason why we're talking about this is because very recently Dabur had to rationalize its GT inventory because of fast growth in quick commerce. Obviously, it accounts for just about 2.5% of your overall sales. But I wanted to understand what kind of products sell on your Q-commerce platform. If their contribution increases, then will that have a positive impact on your margins? Because the sense that one gets is that Q-com has, not a lot of these low-value products. They still have some of the premium products.
Yeah, so Q-com normally doesn't sell small value packs. So 510 will never be a Q-com game. It'll be the large packs. That's one. Second is Q-com is more of an impulse buying. Suddenly I thought of buying something, I'll place order on that stuff. So how we look at Q-com as a channel is also is helping category grow, because many a times you would choose not to have it. Because you do not have pantry, or there in your house, and you don't want to step out. But Q-com gives you that space that within 5 minutes or 10 minutes, you can get that stuff home. So that's the opportunity wherein category also grows. But at the same time, it does impact general trade. And there is a noise wherein, the general trade or these small retailers, they definitely, are getting impacted because of this channel.
All right, we're getting feelers every week on a new list of buyers emanating for Haldiram's. Have you heard anything? Because the last news report was that Temasek is looking to invest in that. Anything that you've heard on that space?
Those are the news you often, every month you see some new name coming up. I mean, till such time it happens, I think we all will have to wait and watch.
But it's on the anvil, right? Something is likely to happen soon.
I can't say on that stuff, not that I'm aware of.
All right. Thank you so much, Manoj, for joining in. Wish you and your team a very happy festive season and hope the demand actually pans out as you are anticipating, and even better than that. It'll be good for consumption, good for your company, but more importantly, good for the country as well. We'll take a short break on that note. In fact, before we do that, let's talk